The president's tariff announcement sparking a global sell-off, and we haven't seen much improvement with the Dow still down about 1,250 points this hour. So let's get right into the question. Should you be buying here? Are there opportunities? Where are the new safe havens? Victoria Greene is Chief Investment Officer at G Squared Private Wealth and a CNBC contributor. And Victoria, I'm going to ask you a lot of the questions that we've been getting in here, but top level, what are your thoughts on the sell-off?
I mean, it's so bad that I looked at it and I was like, oh, we're not down more than 4%. That's good. I mean, that's how terrible today has been. I think today is a step back. You either hold or you buy. You do not panic sell. The worst thing you can do is to knee jerk into a panic sell. These days happen. They are terrible. They're horrible. They feel bad. Likely a little bit of an overreaction. A lot of bad news is now priced in. Yes, I do think you could see a little bit further to go before we actually bottom this out. But for this, it was definitely a rip the Band-Aid off moment. And the biggest thing I caution against is the prime directive of investing is buy low, sell high. Do not allow yourself to panic into selling today because it feels horrible and you're looking at your accounts and you got big fat red numbers on the screen. Best to just step away if you're tempted to sell today because it's likely that you're going to end up destroying value.
So we just were talking to Deirdre about tech and whether it's a safe haven or not. One of our viewers, eMoney, asked, what about some of the software names, specifically Palantir, Spotify, Duolingo? But broadly with SaaS, you said, look, they don't sell physical products. If they're doing software as a service, should it be a safe haven in the coming weeks?
Not as much as I think everybody thinks it may be, because I think IT spending could come under pressure. Look at Palantir is a great example. They got hit with Doge. They're pretty exposed to government contracts. We could see a pullback there. I think it's how necessary is the software to the operation of businesses, but it may still crimp growth for a lot of software companies. Salesforce, Intuit, Workday, some of those may just not see the growth levels that they need to justify. I'm not sure software is the safest place to be sitting here because yes, they're not selling physical, but they could still get hit with the macro headwinds as people potentially suck back on IT spending and don't want to expand. Palantir also, anybody exposed to government contracts here, ServiceNow, things like that, could be seeing the Doge effect and government contracting fall as everybody's looking to cut costs. So I'm not sure software is a safe haven. Spotify, I see it a little different than, Duolingo and Spotify are more on the entertainment side. Spotify has been a very strong company. I see that more as a Netflix and a subscription-based, and some people are going to cling to it when everything's terrible, though. You are going to look at your subscription spending. If you're having to cut your budget because, as you pointed out, the costs at Walmart for food are rising, so you may be cutting your Spotify premium because you just can't afford that cost on a monthly basis. So not necessarily as secure as it seems just because they don't have a physical product being tariffed.
Okay, sure. And a lot of people are asking about safe havens. A few people asked about gold. It was on a tear. Today it's down, although only 1%. So thoughts on gold, thoughts on other quote unquote safe havens in this market?
Yeah, I think gold could be 3,500. I tend to like the T-bill and chill as my safe haven here because it is absolutely, the short treasuries should be able to be somewhere you park in money market. If you're looking for absolute security, gold after this huge up quarter it just had in Q1 may be vulnerable to some sucking back. I tend to think gold's going to hit 3,500, but as we've seen today, gold is not necessarily always as stable, and you're going to see some price fluctuations, especially as it was up 17% in Q1, and after what a strong year it did last year. I just caution that it's not necessarily going to just march upward every year. That being said, the retail buying globally of gold, we had reports out of Chinese retail buyers as well as government buying of gold, and the inflation fears, gold is historically a very good safe haven. So absolute security, I'm going with my T-bills and money market. Gold, I see it as a very good inflation hedge. You just have to be prepared for a little bit more potential volatility, though I see it as a 3,500 by year end for gold.
Wow. All right.